Is it too late to get into this pump? And will the pump continue going into today's inflation results from CPI? Well, this is some of the questions that we're going to address in today's show and more. I'm going to give you the exact levels as well as 2 trade opportunities, which I've just found and opened up right now this morning. So stay tuned and peel your eyes because there's a lot to cover over here in today's show. And let's get straight into the most important thing of the day, without a doubt, is going to be that CPI month-on-month and year-on-year data, as well as the core CPI, which is coming out later today. Now, this will ultimately drive whatever happens with crypto, whether this rally is going to be sustained or it's going to turn out to be a massive, massive bull trap. It's entirely dependent on this data. And if you have a look over here from �11, the CPI estimates for tomorrow, according to all the major banks, is coming in at an average of 6%. Now, what would that look like over here? If you look over here, the previous one we had was 6.4%. Expected is 6%, which means, of course, if it comes in as expected, expect that the market will continue on with the same trend that it's been following, which so far is starting to move back towards the upside. If it comes in anything higher than that, obviously that means that inflation is becoming entrenched, and that is not a good thing. Then means you're going to be looking at much lower prices. Anything under 6% would be incredibly bullish, and I would expect a massive, massive short squeeze to take place and Bitcoin to push probably into the 27 to 28K in pretty short order. So those are the numbers. That's what you need to focus on. It's the most important thing for today. And I just wanted to bring up something interesting that I found, but put on your tinfoil hats for this one. It's not my quotes over here, but I think that it's worth mentioning. So Watcher Guru says, just in Signature Bank board member says that regulators shut down the bank to send a strong anti-crypto message, right? So we got this operation choke point or chokehold, whatever it is that they want to call it, whereby you essentially stifling the crypto industry and you stopping all the on-ramps and off-ramps, the fiat on-ramps and off-ramps, which means you're pretty much suffocating the entire crypto industry and the liquidity that we have is basically trapped within the market at the moment. So here you have it from Frank. Regulators shuttered Signature Bank to show crypto is toxic. That is by Barney Frank, which told the block. Who is Barney Frank? It's this guy over here. There's Barney Frank. So he was a member of the U.S. House of Representatives from Massachusetts, 4th District. So he's in politics. Now, if you go through this over here, this is pretty interesting. It just came out of here. And he basically says, Barney Frank openly admits that Signature was arbitrarily shuttered despite no insolvency because regulators wanted to kill off the last major pro-crypto bank. Because remember, we only had 2, right? We only had 2 major crypto banks that we were dealing with. And now pretty much they've both gone down. So he says, heard this independently from other sources as well. I suspected as much last night, but confirmed today Signature was executed last night, not due to any runs, but as a political scalp intended to be veiled by the fog of war. And then he says, apparently even FDIC was surprised when it was dropped into their hands. They claim justification was Signature's Signet product, which was perceived to be systemic. My conclusion is that politicians like Liz Warren, together with regulatory bodies, fragilized crypto banks and encouraged runs against them, then used withdrawals as a pretext to close them down. What was meant to be a surgical operation became a massive banking crisis. Obviously, that contagion spread, and then people started to panic in other banks, and then you had banks like the Silicon Valley Bank, which also started to collapse. And you'll see soon there's more. There's other ones that are starting to fall. And he says, because many are saying that Frank isn't impartial, some more evidence over here. Signature asset portfolio was nowhere near as troubled as the Silicon Valley Bank. See the attach. And he puts all the attachments in over here, showing that basically Signature Bank was still okay. Their hole wasn't nearly as big as Silicon Valley Bank was. And he said the sell side felt Signature was around yesterday. FDIC was reportedly surprised by the decision on Sunday night. And he says, lastly, if you don't think that Frank has a reliable read of the situation, the Frank in Dodd-Frank, former chair of the House Financial Services Committee, then he can't help you. Someone, if you go through the comment section over here, people drop other evidence over here that this is in fact true. Let me know in the comments, what do you think? I mean, what do you guys think of politics and the government? Is this something that they would potentially do to crypto to try and strive for that innovation? And what happens next? Do you think that pretty much crypto just moves elsewhere to other regions of the world, and basically we still ultimately thrive. But at the end of the day, obviously, this is definitely a bit of a stronghold on the industry, and definitely sets us back at least a couple of months to years. So hopefully we can get to a quick resolution around this, so that obviously the market can be free and run properly. And if you look at the sentiment poll, I think it's pretty interesting. So what percentage of your net worth is allocated to crypto, not including stables? And then he asked what tokens in the replies. And I mean, this is quite hefty. Look, I mean, I've given away what I clicked over there. You can see the little arrow, what percentage is in crypto. And you're talking about a lot of people in that 51 to 100% of their money is in crypto. Pretty much you can say that most of it, at least half the people, have more than 25% of their wealth in crypto, which is huge. Let me know in the comments if you want to. I mean, most of you can't be doxxed. You have random alias names like DGen Club and Ape Lord and things like that. So let me know in the comments, what percentage do you guys have allocated into crypto? All right, so other banks, now you have Wall now down 84% and FRC is down 74%. So both are currently being halted with regards to their trading. So a lot going on still with the banking contagion is still spreading. And then if you look at Walter Bloomberg, we're also looking at obviously the inflation. Now the probabilities have fluctuated radically over here. According to Morgan Stanley, they believe there's still a path that you could get 50 basis point rate hike in March. If we get 50 basis point rate hike in March, the market is absolutely going to nuke. I can tell you that much, because if you look at what's being priced in now, a lot of people are starting to price in that there won't even be any rate hike. Barclays says that the Fed is likely to hit the pause button in March. So these are some of the at least feelings from these major banks. NatWest says that we do not believe that the Fed will hike rates in March. And if you look at the Fed tool, this is probably the best one to look at as an indicator. Now, this is massive, the way that things have changed. Now you're looking at 43.9% believe that there will be a pause in the rate hikes. There won't be any rate hike at all. If you look at 1 day ago, there was pretty much 0%, 1 week ago 0%, and 1 month ago 0% chance of that. For a 25 basis point hike, we're looking at 56.1%. I would anticipate that this will start to fluctuate even more over the coming hours. So definitely keep an eye out on this. It's from cmegroup.com. And then just go through to their market interest rate hikes tool over there, and you'll find that. Benjamin Cowan says that the markets now expect 5% to be that terminal rate, and rate cuts are going to happen in July. Congrats to the Fed. Looks like they did break something. And we've said this many, many times. Ultimately, they keep pushing and pushing until something breaks. Something was starting to break, and now we need to have a change, right? Something has to change. But it's a complicated situation, because obviously once they stop raising interest rates, then you might have that basically like a Boeing when it comes into a runway and it starts to bounce off, and then inflation starts to tick back up. You might start to see something like that happen in the future. So that is obviously worrisome for the long run. But for the short term, you would expect that they are probably going to slow down or even pivot. Now, Biden addressed the whole banking thing yesterday. He said that basically Americans they can have confidence that the banking system is safe. Your deposits will be there when you need them. The second and third largest bank failures have happened in the last 3 days. And ultimately, he also mentioned there that they're going to instill tighter regulations. So we'll have to see how this is going to all play around that operation chokehold or choke point or whatever it is that they're labeling this. You can expect that over the coming weeks, this story will intertwine and unfold, and we'll ultimately know where we're going with the fiat on-ramps and off-ramps, because it is quite hectic when you look at what 𝗍𝗍 is doing as well, how this all ties in around the stable coins, and he's deploying that $1 billion, which we mentioned yesterday. So Adam Cochran says it very well over here. He says, you got to admit that 𝗍𝗍 plays a good game. He basically just told you that he is worried about BUSD, of course, the Binance stablecoin, to the tune of dumping $1 billion of it into Bitcoin, but made it seem like it's a good thing, and he let you front run so that there was liquidity. That's some 4D chess right there. Then he says BUSD's risk or centralization hasn't changed, because it was already offboarded by Paxos. The system now either has to write down remaining BUSD or absorb it. Absorbing it will spike risk on assets at first until people realize that they are swapping for bag holder USD. So we basically have like this echo chamber, echo bubble that's rally that's currently going on. Most of the market movements you have to understand from a liquidity perspective, unless the fiat on-ramp, off-ramps are reopened and liquidity gets injected back into the major markets, the traditional markets, then any crypto rallies that are happening from here are just stable coins that were already locked within the market and are being deployed, which means you need to be very, very careful with the way that you play this game. You need to de-risk, if you can, some of your money. If you are one of those people that click the 100% invested button, 100% of your net worth is allocated into the crypto market, whether that be stable coins or other crypto, you need to be careful. You need to consider a way to potentially get some of that out into real world assets that just in case this turns south, you'll be okay. All right. So irrespective of price wise, that's not too important yet, because I'm not saying that we're not going to have a bull run or anything. I'm just speaking from a higher order level, just thinking basically from a top down perspective. So if you look over here, Coinbase has also disabled trading for Binance USD. So probably not a good sign. And then you had TED Talks who basically showed over here that BUSD was still basically full within this wallet. They haven't even started deploying the funds yet. But then Zoran came out, and he came out with an Etherscan address that basically says from what he can see, CZ already emptied his clip. Like how we talk like a criminal over here, emptied your clip. And if you look over there at the ETH balance, pretty much there's nothing left. It's been emptied. This account has been emptied. Whether there's other ones, I'm not so sure. You'll need to use one of those breadcrumb trackers. I'll look for it for maybe tomorrow's show. I couldn't find it in time for today. But if he has fully deployed, then maybe we've reached the range high of price and we could start to turn back over at a later stage. If he hasn't deployed, then I would say we're going to deviate above those range highs and there will be higher prices. Now into the different flows, the flow models within crypto and other flow data that we look at, as well as price action data, what I'm personally seeing is the potential for still further upside. I want to see a stronger liquidation cascade on the short side. I know a lot of people are shorting at the moment, which makes sense, right? Of course, you're approaching range high, makes complete sense. You'd want to short into the range high. But I still think that we see a deviation above that range high, capture that liquidity, you see a big spike down in the shorts over here, and then there's the potential that after that we come back down again. So I would be looking to take profits from higher levels, and I'll give you those levels in a moment. First, let's look at the S&P 500. S&P 500 has come into the 0.25 level of the range. So 25% through the tight range that we're in on the daily chart. You have range low, range high, mid-range is the yellow line over here, and then the 0.25. It is currently holding over there. As long as it can defend this region and hold this, it will have a chance to bounce up and get above the mid-range, and then you can start to target back towards the higher levels. It works from liquidity to liquidity, right? So the next most obvious level of liquidity that I'm seeing is the 75% of the way through the range, which is pretty much that wick over there. If the S&P 500 could bounce from here and capture that liquidity, that should give Bitcoin its final push up through the top of the range over there, clearing that 25,500 level, taking out all the guys that have been shorting with their invalidation just above that level. So, of course, you need to have a trigger plan, right? If Bitcoin does start to turn over before then you need to know that you can cut your positions. You don't necessarily need to blindly wait for something like that. So that's what I'll be watching. The VIX has also picked up heavily. So you got the Dylan Leclerc over here. He shows that the 30 handle for the VIX, the S&P 500's volatility gauge is currently at 5 months highs, which I've shown this many, many times over here before. So let's take a look at it again. Anytime that pretty much the VIX reached this region in the past year. Now, I'm not talking historically over the lifetime of the VIX. I'm talking about in the prior year. So looking all the way back from January. Once it got to this region over here, you typically wanted to be selling your positions, right? Once the VIX got into this gray box over here, which is between that 34 and 38 level, let's say 34 and 37 level, that would be where if crypto or stocks, whatever asset class you're looking at, is at a technical level of support and the VIX comes into this zone over here, that is your opportunity to buy. I have a risk line at 30. The risk line basically suggests that once the VIX holds above this level, big moves start to take place within this region. Between 30 and 36 is where you see the big trending move. So keep an eye out on that. Yesterday, we spiked all the way up to that 30 level. It was a big move that we had there. Okay, the dollar, the US dollar. So the DXY, you have it at critical support at the moment. Downside is more probable given the growing economic concerns. Basically, that's what he's saying on this chart over here. You're starting to get a bearish cross over here with the MACD. And if that is the case and you start to break down below that 103.5, then the dollar might start to sell off very quickly. And we know what that means for risk on assets. The money usually flows into there. And there it is. That's the key level, the key yearly level. Put this on a yearly chart. I'll do it for you actually right now. And you can see key yearly level is over there, coming in at 103.94. So if you start to close underneath that level and lose that, you're probably going to shoot all the way back down to that 101.27 on the yearly chart. So that is what bulls will be hoping for. That's probably one of your better case scenarios in order to keep this rally going. Next, Bitcoin. Monthly chart looks very, very strong. We did cover it yesterday. We had the strong bounce off of the 7 MA over here, the white one. We've now started to reclaim that 50 MA. The 50 MA has been a real struggle, a real battle. Let's make this bigger to show you over here. Have a look at the 50 MA. Pretty much ever since we had the major sell-off over here, we only closed above it once. That's where our major resistance is at that. Over here, we got a key monthly level, 23,300. And then straight rejection down. Wicked into it, came back down. Came into the 7, came down, reclaimed the 7, but failed to get above the 50, came back down. Next month, broke above the 50 once again, closed back down. So this monthly close will be huge. If the monthly can close above the 50 MA over here, that means that your next target is going to be the 20 MA, which on the monthly chart is coming in at 33,000. Remember, that is trending down with each passing month. So you can see that if we close above the 50 MA, as well as the 7 MA, which we're most likely going to do, then your next potential target is that relief rally all the way up to that 30K level with a downsloping 20 MA that might be hit in the next month or so. So something to keep an eye out on for the high time frame. All right, this is the chart that we gave ages ago. It is still playing out, sticking with the plan over here. Give it a couple more weeks and you might peek your head. Same thing as what I just showed you on the monthly. You might peek your head up above that range high level, get to 28.7, and then be careful for the deviation back down after that. So very, very important over there. Okay, the Gaussian channel. We have officially broken back into it. If you close a weekly candle into the Gaussian channel over here, that would suggest that you're most likely going to have continuation. Just picture this. Imagine that the weekly closes like this. Now, if you're just looking purely at candlesticks, that would look pretty damn bullish. A weekly close over anywhere from here or higher, especially if you can close above these previous week highs, which is not far from here, right? You're looking at 24,325. Close at 24,325. And this starts to look like a major reversal candle. Now, some people might actually think that you're way too late to enter the market on a close like that. But if this were a 5-minute chart, that would probably be how you would trade it. You'd wait for a candle to print like this, a reversal candle. You'd wait for the next candle to be fully closed, and then you would be able to place your entry with your stop below there. Now, no, you obviously can't do that with a major part of your position because you're looking at 20% down to your invalidation. But ultimately, this is the way that it would work from a candlestick perspective. You're just looking for clean chart patterns over here. Reversal candle, strong green close. Next candle should suggest continuation from that point onwards. So if that happens, then you target towards the middle band over here. Also lines up with everything I'm showing you over there with the monthly chart as well as the other weekly chart. 28,425 is that next level. Now, I'll have an interesting decision to make. I have all my dollar cost average bots that have still been running. Remember, I anticipated that this rally would happen over the course and still higher. I'm still anticipating that we make it to about that 28K level, which is why I've been dollar cost averaging aggressively into the market over the last couple of weeks. And I'll be faced with the decision to basically close out these positions either at break even or in slight profit once Bitcoin gets towards that 28K level. I'll keep you up to date on that because I know a lot of you probably followed along with this trading strategy. Remember, I do also have the 1-year portfolios, which is the bottom two. These ones, it's exactly what it says, a 1-year portfolio. I'm at dollar cost averaging a lot less, $150 a day in that one, $10 a day in this one. So this one I'm good to leave for a year. These ones I'm dollar costing aggressive, guys. 100, 550, 400, 165, 75. That's dollars per day. I'm obviously not going to keep that up for a year. Otherwise, I'm going to be dollar cost averaging around $1 million into the market, into illiquid altcoins, going into an illiquid market with a possible contagion spread. That is not a smart plan to follow. So I'm just updating you on that. If you do want to dollar cost average and create your own bots, OKX does a great job. All you need to do is go through to the recurring buy section over there, and you'll ultimately be able to create your bots. Where's it? How do you create it? Oh, yeah, you got to trade. Click on trading bot. So from manual trading to trading bot, then bots, recurring buy. On the bottom over here, very simple. You just add whichever coins you want, determine your splits. So maybe you want to put only 10% in the one, then you just change that. You say, I want 10% in that one. I want 50% in that one, for example. And it will create bots for you that trade automatically. You set your frequency. This is super useful for those of you guys that don't have time and you're not too worried about timing wise experiencing some sort of a drawdown. Then this is really the way to go. You come on here once a month and then you pull all your coins from the exchange onto cold storage, and that's it. Bob's your uncle. Carry on. Okay, trades I've taken. Okay, so here's the 2 trades I'm in. I did regrettably close my Bitcoin long, the massive Bitcoin long that I had from $19,700. I closed that. I had huge profit. I think I closed at about 120% profit, which was on quite a big trade. So I try to find 2 more trades over here. I basically am looking at AGLD as the one, and then Ethereum is the other one. The trades have been dropped in the Discord. I'm going to quickly bring up the Discord for you. So there it is. Here's the trade setup. Basically, you can, okay, that's GMT. That's a different trade setup. I had the here it is. Perfect. Here's the AGLD setup over here. You're basically looking for a pullback into the 0.786 fib retracement level. Now that's a high probability stop and reversal point for the market. When you use the fibs, price often, if it is going to bounce, it bounces and reverses from that point, and then there you have the trade opportunity. Get into the Discord. If you're not in the Discord, all you need to do is, again, click on the link below. I know some of you watching the show now might be new. Click on the link below, and all you need to do is go through to the Crypto Banter Discord hub over there. Click on that. It will take you through to a sign-up page. You need to have an exchange link to get in. You can use BitGet, OKX, or Bybit. Once you're verified on that, you will get your free ticket into the hub. Okay, there it is. Those are the trades. I think I'm going to raise my stop over here. Let's drop it over there. Just de-risk a little bit on that one. Okay, next, PrimeXBT. If you want exposure to other markets, I'm still running these. Here they are. 16% up overall currently. I have other guys that I'm copy trading who trade things like gold, other currencies, so pound versus yen, etc., etc. And that just gives you a little bit of exposure to other markets. There is also a sign-up link for that should you wish to do that. Okay, liquidity, all around liquidity. So apparently, according to Walter Bloomberg, this guy tweets a lot. You should follow him. He tweets like every 35 seconds. Quite unbelievable. I know he's a bot. That's a joke. Okay, HSBC plans to inject £2 billion of liquidity into SVB UK. So let's look at the liquidity chart over here. You can see a very, very small green tick up on the US liquidity. I don't think that I have the UK liquidity on this chart over here. I'll see if I can get it, and we'll see if that changes. But if you break this line over here and you start to get a major liquidity injection. So look at what happened in January. Do you see that? This is basically when the market rallied, right? On the 30th of December, you had a liquidity injection. And as a percentage, it went up. There you go. 9%. 9%. Think of what a rally that created within crypto. Just a 9% injection of liquidity. If you start to break this trend line over here and the liquidity can start to trend back up, I assume soon during the course of this week, we'll get more guidance on what's going to happen around the liquidity and this form of quantitative easing. But if it truly does come into effect and you see liquidity injected back into the markets, obviously that's going to be great for crypto, especially if the fiat on-ramp, off-ramp problems are resolved. Okay, total 3 coming back above the mid-range over here. Your next target is going to be the range high. Bitcoin has already made a higher high once again. We want to see the same for altcoins. As you can see, altcoins are mostly red. They're getting absolutely obliterated by Bitcoin at the moment. Let's look at the Bitcoin dominance quickly. Where do I have the Bitcoin dominance chart? Okay, Bitcoin dominance. This is not my usual Bitcoin dominance chart, but you can see a clear range over here. I would be targeting on Bitcoin dominance up towards about 48%, 48% on Bitcoin dominance before considering going too heavy into altcoins. So that's what I'm watching over there. Ichimoku clouds working perfectly. We have now officially reclaimed these EMAs over here, the blue and the red one. So that is one good sign. You want to see the blue cross back above the red to gain additional momentum and strength. And then more importantly is this chart over here. You can see the green line over there, which is the DI positive, has cleared above the DI negative, which is the red one, as well as above the ADX. So the ADX is the average directional index. If the green line can continue to hold above here and you start to see the ADX turn back up, this is where you have a very strong momentous move that can move towards the upside over there. So that's what you'll be looking for. I guess I should talk about the other end. If you're bearish, obviously what you want to see is you want this to immediately come back down like that, and then the ADX to start to pick up and show that basically bears are taking back control. Right. This chart's worked absolutely perfectly. We had over there the Fisher distance from EMA came into those lines. Big bounce over there. I would start to ladder out of my positions once you get around this 1.6 level. I'll probably start taking some profits on my spot Bitcoin. And then once it gets deep into that 3 to 4.2 level, that's where I really start aggressively taking profits and raising my stop losses over there. Okay, next. Range high. Here we are. We've pretty much arrived. Look at that. Even today, we've pretty much tagged right into the top there. As mentioned, my expectation is still that you're going to see something like this. I think that we're going to squeeze the shorts out, and then we can reassess and see if it comes back down. Now, what do you need to do? I told you that obviously you can have a trigger plan for either the upside or the downside. It's kind of difficult at the moment if you have missed this position. You're probably better off looking at lagging altcoins with the hope that Bitcoin dominance drops and that flows into altcoins to get altcoins running, because then you have a clearer level of invalidation. But one thing that I'm viewing is this over here. Let me grab this. If there was going to be any pullback, I think this would be the level to watch. Just to be clear, I don't necessarily think this is going to happen, but if price turns over, you want to move on to a lower time frame. Let's go on to 4-hour chart over here. This would be the zone that I'm looking at. You can see, you know, for these guys that do these ITC inner trader circle courses and whatnot, they'll be looking at this as what you call a fair value gap. So mainly they're going to be looking at that area as a potential area to get refilled. But either way, I'm looking at this order block level, this region over here. If price does come down aggressively, you might get a chance at 22.5 to fill your positions. And then you have another chance to go on the long side. I personally don't think that's going to happen though. If it starts rejecting from here, what you want to do is go even lower. I still think that we go over, guys. I still think that we go over. So you got your range high. If you see something like this, you might have one spike up and then you quickly get under and you start to hold there. That's your opportunity to go short, right? Then you can put your stop above there and then you have the chance to short down to the mid-range, maybe a breakthrough later and go all the way back down to range low. So that's what I'm watching over there. As mentioned, I think that shorts are going to get aggressively squeezed here. I think that we probably go much higher, and then we can see from there. You know the saying, right? That it often goes lower than they think it's going to go in a bear market, and in the relief rallies, it often goes much higher than what you think it could go. You know, you could still have a relief rally with Bitcoin running all the way up to about 34K, and that could still be a major, major relief rally. So do keep that in mind. Longer term, still bullish as long as these EMAs hold. The EMA 200 is the white one, and more importantly, the MA 200 is the dark blue one. As long as we're above that, I'm okay to hold long-term spot positions. Okay, funding rates, extremely negative, obviously created the squeeze. For the first time, they're slowly starting to tick over the zero line and could potentially turn positive. Usually those are going to be the late longs that are going to get absolutely wrecked. So once you see this turn fully positive like that, look at this one over here. This is using the BitMEX funding rates. So you turn positive. Look at that. That was that wick there, right? We haven't had a spike there. If you start to see the spike come up over here and you're going above the range high, you guys know where the range high is at this point, that 25.2, 25.3 level. Then you can start to basically consider that maybe it's time to take profit. Okay, guys, please give the video a like as well. Smash the like button. We are shadow banned on this channel, at least so I've been told according to Rand. And therefore, if you smash the like button, it helps to get the video out there. It does get the algorithm going. Okay, next. Holding above the EMAs over here, important. Same thing. I just want to see these hold. Once the yellow crosses above the red, that would give additional momentum to the bulls. Not much new to mention over here. You do have the RSI that's still tracking up. As long as the RSI is above, let's just quickly grab it. As long as the RSI is, or price is above 22,087, then the RSI should continue to track on upwards, meaning that the bulls continue with the main momentum. They have the edge at the moment. Next. Okay, just a cleaner view of the range. We've covered that. Okay, here you got your shift in trend, right? So we had the lower highs, lower lows, lower lows. This is on the 4-hour chart. And then we mentioned, well, what's going to happen next? Are we going to create a lower high by the monthly open? This is often what happens when price is coming into a key level of resistance. If it's going to break through, it happens incredibly aggressively, too aggressive for anyone to get an entry into that. And this is exactly what happened over here. So you have a shift of trend, right? You now officially have your higher high, wherever that may be, whether that happens over here or whether we continue on up like that. That means that eventually you probably are going to pull back into the range again. That's going to start to look like a major deviation. Range traders are going to go ballistic, right? So higher high, that means what? You should look for a higher low, wherever that may come. Maybe it comes over there, right? That means that range traders are going to go crazy for this. But I want you to already think ahead. When I say that, I want you to think ahead and view this range. You got the range high, you got the range low. And just think to yourself, when that deviation happens, fair enough, hit the short side, but where are you going to start to load up on your positions again, especially your spot positions? It should be around the mid-range. The mid-range may be the 0.75 level. So let's go into this chart over here. There it is. Here's mid-range. Here's 0.75. So possibly the major pullback that we get in the future could be around 21.7, or it could be around 23.4. Guys, I wish you could just see Fred. I wish we could dox him. He's doing that thing at the window again that I've told you about. I mean, this is the co-founder of the company. The co-founder of the company. Okay, so that's what I'm watching there, guys. Keep an eye out on that. Next, if we look at the CVD levels over here, everything looks healthy. Not much to report on. Everything is following according to plan the way that I would expect. Any questions? Is there any questions over there? Let's quickly have a look at the comments. All right. Any questions? Ride the run. Devs, turn your camera around. Yeah, I wish I could. They bolted this camera in. I can't even move it. Okay, guys, I don't know if there's not any questions. Then I think that we'll probably close off. How much time do I have left? Still have a little bit of time. Okay, you guys look sorted. Everyone seems, I know you guys are proficient traders. If you are new, then yeah, guys, just take it easy, reduce your position size. Maybe, you know, when the market starts moving, a lot of new people come back into the market. If you are somebody that's new, then I would say just take it easy, just observe, try, learn, open up a demo account, trade a little bit on the demo account. And then also, if you are going to trade real money, just trade, you know, with smaller amounts. Reduce your position size by about 10 times. So if you are thinking to yourself in the heat of the moment, I'm going to put $1,000 in this trade, only put 100. That's it. And then put the other 900 away. Okay. Has SZ started? Who? CZ? Has CZ started his offload? According to this over here, yes, he has. According to this, he started to offload. Cool, guys. I think that brings us to the end. Have an absolutely stellar day. I will see you all on the next video. Please do give the video a like. Hit the bell notification and subscribe. I see yesterday's video got 2,900 likes. It would do me a solid. Please take 1 second out of your time. I would love to get the likes to 5,000 today. Let's see if we can push it to 5,000. I'm not somebody that's, you know, seeking for engagement. It just helps the channel. It helps the channel. It's not for my own ego. That's it from me. I'll see you all tomorrow. Have a stellar day and look at the Discord. Look at the Discord. Cheers for now.